In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to DebateCrypto. Crypto fam, it's your boys, CryptoKeeper, BlockchainCrusader. Literally, with CVO being on every week, it should just be, hey, it's T with CVO Crypto. What's we doing?
Doing good, man.
Always good. Always a pleasure to be here, fellas. Thanks for having me.
Fantastico. I'm excited about everything except for this crabby, weird, get your hopes up market we got going on right now. But we'll get into that here in a minute, guys. Smash the likes if you are in the live chat from mobile. Make sure you X out. Hit the like, do your thing there. If you are not subscribed to the channel, we appreciate the love there. Make sure you check out CVO. He comes on here every week to give us fantastic technical analysis, knowledge, and getting into the charts. So we would make sure you check him out as well. He's got YouTube. He's got TikTok. He's doing his thing everywhere, just like we are. So make sure you check him out. As a reminder, real quick, before we get started, we are giving away a full year of Market Cipher. You got to be subscribed to the channel here on DebateCrypto. And then also we've got our Academy. So you need to be in the Academy to get the Market Cipher. Just wanted to throw that out there. Also, I almost forgot. If you use our Femex code, if you want to do some trading, you don't just have to do leverage trading with Femex. You can actually do spot trading as well. So it's not just leverage. But if you sign up, the first 50 people to sign up, and listen, all you have to do is sign up. You literally can deposit $1, right? Like all you have to do is a deposit. You get $20. So if you want to trade on somebody else's dime, right? If you want a free $20, sign up with our Femex code. Literally, all you got to do, make a small deposit. So I want to throw that out there. But without further ado, right quick, before we dive in deep into the TA, let's take a look at the market as a whole. We're down 2.35%. It is red. I really, you know what? I could get into what all the projects are doing, but guess what? Bitcoin's down 2.61. What would you guess ETH is? Oh, 2.63. Okay. Everything's down just a couple percent, guys. The only thing Terra that was yesterday. Yeah, not too much up. I mean, we got Dogecoin at number 11, holding strong, baby. Doge to the moon. But yeah, other than that, we are just crabbing along. So Paul, kick us off, man. What is what's going on with the market right now? I feel like I got my hopes up a little bit. I mean, it wasn't a big move, but I got my hopes up a little bit. My leverage trade, right? My ETH position, since I had averaged down so much.
Goodness.
Dude, I literally moved in, like literally all the way up into the positive. Now that's dropped back just a little bit. But at any event, what's going on? Tell me about it.
Well, first off, we got to talk about your leverage trade, bro. So, like the second, anybody that didn't watch the last episode, we were waiting on Nick's leverage trade to get liquidated at 29.50, and Ethereum drops to 29.30, and then turns around. And it's like it always knows, right? So it's I thought of you, man, and I was praying, and I didn't say anything for a few days, but you ended up leveraging down, I guess, some more. So you're still in it under some water, I assume.
The leverage gods were tapping me on the shoulder saying, average down. And then Miguel was saying, you're an idiot. And I was like, I'm going to listen to the leverage gods. All right, let's get it.
That's it for sure. So we'll kick it off here. So I'll take a look at my chart here in a second. Go ahead and share my screen if you guys can. So we're looking at Bitcoin. This is a 4-hour time frame, and you had this falling wedge here, which is generally a pretty bullish pattern. It's the 4-hour time frame. So let me find something here. There we go. Generally, you get this downtrend here, and essentially this breaks to the upside 68% of the time. So when it breaks is the question, right? So this could just continue on. But we did get that break right here. And then essentially we actually formed a ascending channel right here, which actually turns into a pretty bearish pattern, right? So you start heading up, and this breaks to the downside about 68% of the time. So with that being said, just some short-term stuff here, right? We were looking for this level right here that I got marked in yellow. This was the previous high. You were looking for this to kind of be overtaken, held as support, and then continuation higher from there. We held it for a little bit, but then we lost it today. And then also with this, ascending channel kind of taking this break, technically the target is down here, essentially where you began this ascending channel from. About
Is
40.
that real quick? Just let me ask
Yep.
you, Paul. Is that what you? So you that technical target that you're pointing out? I looked at this earlier when you had when you had said that. Is that what it is? It's where the channel started that you go back to, or are you doing a measure on that?
No, yeah. Essentially, you look for where this began. Essentially,
Okay.
so
Okay.
and once again, like this doesn't necessarily have to be met, but
Right.
these do generally break to the downside, which is exactly what happened, right? So
Yeah.
there's a couple other things obviously at play as well. You got some levels of support below you as also, but essentially you'd be looking for this slightly worst case scenario at the moment, which is pretty much back down to the lows of where we were. This would still kind of give you a higher low, right? So we just kind of came up and we made our higher high, right, than this previous high over here. And even if we came all the way back down towards this 40,000, 700, 40,900, you'd still be putting in a higher low compared to this 39K that we saw the other day. And essentially, you kind of, see that uptrend kind of continue to begin. That's one way to look at it here. So another thing, if you guys, I know you guys are in the CVO trading group here as well. So you know that I took on a new analyst, Magic Internet Money, and he specializes in volume, essentially ranges based on volume. Is pretty much right. So I've been kind of dabbling in that as well, and taking a look at that here. You got this range here for Bitcoin, right? So based on volume here. And you can see that we've been just pretty much just, going through this. We broke out of this range. And essentially, when you break out of a range, you want to see this held as support. And then you can assume that you're going to continue upwards towards the previous range ahead of you, which would be around the $46,000 mark, whatever. But we actually did break back into the previous range that we were in. So once you break back into the range that you're in, now you're looking towards basically the lows again, which also align up with that previous target I was just looking at, the measured move right back down towards like 40,700. Once again, doesn't necessarily have to come through all the way. You have a couple of levels in between here. You have this middle of the range here, right? Like this is about 42,250, which we pretty much slightly, came down to just recently and bounced above. Then you also have this point of control, which is basically the heavily traded area. Basically, is where like all the volume came in for this range. Basically, everybody's trading in and out of here, and this is about 40. Let's just call it 42K.
Is that what the point of control means when we hear him say that? It's the most heavily volume traded range. Is that what it is, or?
Exactly. Yeah. This is where the most amount of exchange is going on, right? So this is where the most amount of trading volume is coming in at.
Okay.
So this is essentially 42K. Then you got the range lows, which once again, like, so yesterday, this is just like moving averages, right? So you hear me talk about these moving averages all the time. I'm just going to throw these on for an example right now. So you got these EMAs, red and blue, right? So the red one's a 55 EMA, depending on what time frame you're on. Obviously, it changes. This is the 20. And every moment that goes by, this is a moving average based on the time frame you're in. So these change every 4 hours realistically. So the same thing kind of occurs with these ranges as well. So yesterday we were looking at the range high for this value area being more so down here at about 42.8. Well, today, because the majority of volume is being traded up in this region, it shifted a little bit. So once we entered this range once again, now you're looking for the bottom of the range theoretically. You do always want to look for this middle range. This is called the EQ, which is basically the middle of the range, right? So there's about 42 and change, and then you got this point of control, which is another target zone. And essentially, at any one of these levels, we could see a turn. We could see a reversal, right? So it just depends on what's kind of going down around us. I think. So, you got this kind of going on right now. Well, you could also see a little bit of bounce, right? So another thing to kind of pay attention to is we got this little possible head and shoulders coming in, right? That everybody's going to probably want to take a look at. And essentially you're going to have a measured move basically down to here, regardless if this does kind of start to come through. Once again, same situation, right? You're going to have a little relief rally out of here. You're getting oversold on, 1 hour time frames at least, not necessarily the 4 hour, but if you go to the 1 hour time frame, you're getting into these oversold territories. You're starting to curve up again. So we could see a little bit of a relief rally back up towards this 43.250, 43.5 in the short term, and then kind of start forming this little head and shoulders. That would also have a measured move of down here. One of the biggest things I'm looking at too is the DXY. So to put this into perspective I'm hoping I'm keeping it pretty simple here, but to put this into perspective, right? We re-entered this range. Essentially, when you re-enter a range, you're going to be looking for the lows. Granted, you got a few targets in between. On top of that, on the 4 hour time frame, Bitcoin is essentially pretty neutral right now, so it could go either way, right? You got plenty of room to the downside on the RSI and to the upside. So we could see a reversal here. Don't get me wrong. Like, it's not that we just have to go down from here. And then the DXY is something to pay attention to as well, because generally when we see the DXY pumping, we see Bitcoin drop. And then when we see DXY dropping, we see Bitcoin move to the upside. Well, the DXY is in a position where it is oversold, right, on the 4 hour time frame here. So I drew this earlier. But we're coming into a position, and we can stay down here. Don't get me wrong. We can, stay down here for a few more days, however long it is. This is not a guarantee that we're going to just move straight up from here. But at some point in the near future, I would imagine we're going to get an oversold bounce out of the DXY. Probably come up here, the little bearish retest of this pattern up here, right? So even though that this is really like the DXY broke down out of this, we could see this run up here. This would be looked at as a bearish retest and continuation lower. During this move, Bitcoin would be in a good spot. Okay. But during this move to the upside, if we get that, this is where Bitcoin's probably going to run a little bit to the downside, right? And other assets as well. So in the short term, we could see that run down back to like 40K. But all in all, I think that, we're still going to have that run up here in the short term, in the medium term, I guess, so to speak.
So my question is, Bitcoin's retested that 40K quite a few times in that range. So if we keep going down with that head and shoulders pattern and with this possible run of the DXY back to the 40, what is the likelihood that, we break through that 40K support and actually start heading a lot lower? Like a 50-50, like a 40-60. What's that looking?
What if we touched it like 4 times?
Yeah, a little bit more. Let's give or take.
As far as a percentage goes, I don't think I would give it a percentage at this point. But like realistically, you don't want to start closing dailies, below this level, right? So as long as you don't do that, you're pretty solid. So even if we do come back down to this region, you're still creating a higher low, so to speak. We already have our higher high, right? So we're in the midst of a possible uptrend here. So even if and once again, this is just like kind of a worst case scenario right now. Like, I'm not saying this has to happen by any means. But with the DXY being in the position that it is in, it's possible, right, that we see a little bit more downside here again for Bitcoin. Probably get everybody really bearish, in general. Probably panic selling some stuff on the way down. But realistically, as long as you're not closing below on a 4 hour, even on a 4 hour time frame, like we've still not really closed 4 hour candles below 40,700. You know what I mean? So basically below 40K. But realistically, as long as you are holding above this wick below, you're in good shape. So there's only so
many times we can hit that level before it breaks from support, right? I mean, if we keep bouncing on it for the next couple of weeks or whatever, well, don't you think it would be more likely that we break that 40 and head down into the 30s? Or do you still think that even if we range at the low 40s for the couple of weeks, we still have a very good likelihood of a bounce back up?
There is, to me, man, it really doesn't matter what we think, right? Like I'm of all people, like I've learned that lesson of being like, what you think is going to happen doesn't matter, right? So you just kind of have to go with the flow for the most part and prepare for both sides. But realistically, you got 2 things going on right now. Right now, you're making higher highs and higher lows at the moment, even if you come all the way back down to here, and that would be our begin to an uptrend.
Are you calling that a higher low because of the wick down to 39.6?
Correct.
Okay. All right.
And essentially, if you come back down here, right, the time to get worried about like visiting the lower 30s or 30s in general, right, you start closing closing candles, right, like especially a daily. You close a daily candle in this level, you're probably getting a warning shot that we're going to go down lower. For otherwise, man, it's a bunch of chop right now. We may see this rally up towards, more so back to like 47, 49. But in the meantime, you're really just, taking it level by level. So just as any other time frame, right? We run into this bullish setup here, break out, you run up. Now we got a bearish setup, we break out. At the end of the day, we'll probably start forming this, right, where we come down. Worst case scenario right now, right? You break back up and so on and so forth, like continue just kind of from there. At some other point as well, like just, one thing I've been pointing out, which doesn't have to happen at any specific time frame, but the funding rates, right? So funding rates are interesting because I'm trying to see where this is at right now. When you see this lit up, this is like
you want to explain the funding rates for the noobs?
Yep. So essentially there's leverage traders in the market, right? And to me, it doesn't matter about the altcoins down here. What you really want to look for is just this Bitcoin funding rates, right? So when you see all this green right here, this means that the majority is going short, right? So what that means is that you got the majority of the market is, even if that means just 51%, right? Doesn't mean it's 70, 90, 99. But the majority of people are going short in the market. And this is equivalent to when at 69K, 67K, 65K, 60K, the market was going long, and you saw all this in red, right? So 0.01, and I'm going to show you a little bit easier way to look at this, but a 0.01 is like the baseline where that's just kind of like everything's just kind of like evened out and whatever. But we tend to see when we get the market leaning heavily one way, which right now it's short, and doesn't mean that it's going to happen tomorrow, next week, whatever. But at some point here, we'll probably get a short squeeze out of this, right? So, and what I mean by that is that there's too many people over leveraged short. And what happens is we'll get a really quick move to the upside, 10, 20%. Doesn't mean it's going to be 100, but something pretty massive. And we saw the same situation back in, like I said, just multiple times. And I'm going to show you a good example here. I pay attention to the Binance levels more than anything, because that's generally where the most retail are, essentially. And let me see if I can find that Binance chart here.
While you're looking for that real quick, CVO, hey, I just wanted to tell you, chat, thank you guys very much for all the support. We appreciate you. I just want to shout out just a couple things. First of all, the super chats. We will go back and answer the super chats here in just a few minutes. But we appreciate each and every one of them. Heidi, we will definitely we'll let you troll Paul here in just a little bit. I'll get back to that. Heidi has a little TA she wants from you, Paul. James, you rock, brother. We appreciate you, Danny, and we appreciate you, man. Cliff's got questions. Bobby jumping in on the fun, guys. Thank you very much for the support. We really do love you guys, and everybody else in the chat. We just wanted to take a quick second to say we love you. We appreciate you, and Cliff and Heidi. We will answer your questions here in just a little bit.
Bobby. I just love saying Bobby. But anyways, like, so when I looked at that funding rate on a website, it's a little bit like overwhelming. But when you look at it here, there's actually a indicator you can add to your charts. It's called the Binance funding rate. And I'm just taking a look over the last couple months here. It's interesting to note that, here as we rose up to 40K, 50K, 65K, down here, like, so this level right here is that 0.01. Right, this middle equilibrium, so to speak. And then when you see the market going over leveraged one way or the other, right, we got shorts over here, longs over here, short, long, so to speak. It's very, it's interesting to note. So, and once again, this can last for several months. Not to say that, we could, just because we're over leveraged short right now, it doesn't mean we're going to get this random pump to the upside. But when you're looking for things, it is something of interest to kind of note. So for a perfect example here, oh man, my mouse just died. That's a terrible example.
Your mouse is literally dead right now.
It just died. Yeah.
Well, guys, listen, you know what? You showed up for a live stream. You can't expect, everything to be 1,000,000% perfect. Do you have the ability to override, or do you need somebody to jump in and you got batteries, or what you got going on over there?
Yeah, let me see here. Give me 2 seconds.
Well, hey, I will answer. I will answer a question real quick so Cliff, you asked if you could explain the difference between a wick and a candle. So real quick, while Paul's trying to figure that out, I want to explain the difference between a wick and a candle. So when you look at different time frames on the charts, let's say it's a 1 hour chart. Let's just use that as an example. The body of the candle, which is the thick part of the candle, is you'll see the bottom of the candle and the top of the candle. If it's a green candle, the bottom of the candle is the open, right? And the top of the candle is the close, okay, of that time period, of that hour. The wicks, you have what's called a wick high and a wick low, will be the lowest point during that hour that it got to and the highest point during that hour that it got to. So the wicks are just showing you the highest and lowest from that time frame, and the bodies, the candle bodies, are showing you the open and the close of that time frame. That's candle bodies versus wicks. So
Yeah, and when Nick says time frame, he means like if you're looking at the 4-hour chart, every candle represents 4 hours. If you're looking at the daily chart, every candle represents a day. The 1 hour chart, it's an hour. So that's what time frame means.
Yeah.
Fill us in with some more voids. I need about 5 minutes to charge this now. So.
Yeah. No worries. So yeah, let's actually real quick because one of the things Heidi was asking is if she can get some TA for uni, but obviously you're got some technical difficulties going on right now. Miguel, talk to me about what you see going on right now. Do you feel good about the market right now? You feel like I do, super uncertain? What are you looking at?
It's not so much that I'm uncertain. I just feel like we're not going to have that blast off just yet. I feel like people got really excited when we bounced off 40. But I still think that we're going to range in the 40s and even possibly break below 40 and head into the 30s, even if it's a big wick or not. I just don't see us going back up into the 50s just yet. So I just think we're going to keep ranging sideways for the next couple of weeks.
Yeah, the thing that I think a lot of people need to remember though is that none of the fundamentals have changed, and I try to remind people of this when it comes to the crypto markets right now. The only thing that has changed has been some macroeconomic factors, like we've talked about. In March we've got interest rates are supposedly, as of right now, who knows what to believe, when to believe it, whatever. But rates are supposed to raise. We've got some changes in bonds and whatnot, bond yields and whatnot. But other than that, the only thing that's changed in the crypto market has been for the good. We literally have had more and more and more adoption and more and more and more development. And so when we talk about looking at the big picture, when you hear us talk about zooming out a little bit, yeah, these little time frames literally it will make you want to beat your head up against the wall, right? I've been in this for years, so has Miguel, and right now I'd be lying if I said it wasn't kind of frustrating. But the fact is that these type of times, these choppy times, need to happen because they are accumulation zones for a lot of these institutions. And if they don't have time to accumulate, then they don't have enough stacked up for them to feel good about pushing the ball, pushing Bitcoin one direction or another. And so I just think it needs to be understood that these times have to happen if you want the big blast off. These times have to happen if you want to see extreme lows so that you can continue to accumulate.
So, and I'll touch on that a little bit too, right? So you all know that like I was an advocate of the end of the year situation, and what was the one thing though I said would once we crossed the threshold of would be leading into the wild west, which was that if we crossed into January and we were not at that anywhere near the end of the cycle, whatever, like now we're crossing into the threshold of the three of us went through 2017 together, right? Whether we knew each other or not, which we didn't, but we went through 2017. And it was a epic situation, right? I'm sure that is a totally different situation than 2013. And now here we are, right? So for a short period of time, I was, especially me, right? I was looking for a similar situation to kind of occur. It did not occur. It was very heavily, viewable from a little bit of a distance, basically through the middle of November when we started just dropping instead of continuing higher. And at this level, man, we are at a position where I'm still super macro bullish on Bitcoin, right? I'm sure both of you are as well. But I think that the journey to where we're going to go is going to be so vigorous and so I don't want to word shakeout by any means, but it's going to shake everybody out on the way, right? Like it's just like, even picture it right now, right? Say we start picking up. Even Miguel just said it, right? He's like, oh, I think we're going to go to the low 30s, or not low 30s, but just like, kind of chop around here. Maybe we go to the 30s. How many people do you think that way right now? Right. So it's like, it's a super, the longer that we remain down here, the longer that it's going to, get to that level. But then the second that we blast past that, if we start getting, up to 47, 49K, approaching that 50K level, what's everybody's next run going to be, right? It's going to be, hey, we're going to 100K. It's going to happen over the next few months. Like, March and May are the next two target areas, right? That's where everybody's going to be paying attention for. You got the interest rates, talking, that we're going to, get those hiked up in March and whatever. So everybody's going to assume that, we're probably going to have some turmoil around that time. So maybe the market's peaked by then and blah, 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 blah. I think everybody's going to be wrong. I just think that at this point, like, it's just any macro idea at this level is just going to be wrong in the sense to the degree of how we get there. I think that we'll still get to the 100,000 plus Bitcoin some point in this year, maybe even into next. But the level of how we get there is just going to rattle everybody's cage, personally, at least. So
yeah, and I remember you specifically saying also that this was going to be the most confused, like moving into the end of the year, start of the new year. I remember you talking about like you were specifically more talking about like the 100 back down and whatever else, but ultimately that around this time was going to be some of the most confusing times. And I see it. It's absolutely happening, but I think that it is part of the game. And I think that I've talked about it before, like these institutions, they make the rules of the game, right? And you are just a participant. You are in Squid Game right now, right? They are the doll, right? You are the one that's trying to run and, get across the finish line here. They're turning around and knocking, knocking people out left and right. Yeah, I mean, it's definitely.
I think it's going to be one of the two scenarios. Either the most obvious scenario will take place, which people are not expecting to happen because it's so obvious, right? The obvious is interest rate hikes, Bitcoin starts dumping, and we're going to have multiple interest rate hikes throughout the year. So we're going to just keep having dumps, and we pretty much topped out, and we're going to just start heading down. And in retrospect, in hindsight, be like, wow, I can't, it was it. We topped out and we're on the way down. Or the unobvious happens, right? The opposite, which is everyone's expecting these interest rates hikes to be super scary and change things around, and it's literally a nothing burger, like I've said, right? They raise it by 0.001, right? 0.01, like something minuscule, doesn't really affect anything, and we start actually having some bullish momentum, right? The report that the SEC is talking about coming out for crypto comes out and it's actually bullish, and we start having these like little mini catalyst events to push us upward. I think it's one of those two. I think that there's nothing else besides that.
It's interesting, right? Like it's of all people, man, I am one to say that, trying to predict the future market is a fool's game, right? At this point, right? So like I took a lot of time to establish that within a 4-year cycle theory, blah blah blah. But like as soon as it was done, man, that's one thing I'm really big about, is that, if I'm wrong, and if what I'm looking at, if what I'm thinking is not correct, I'm 100% able to say, that was incorrect. I'm willing to, adapt. I'm willing to change. I'm willing to look at other options at this point. And that's what I've done, right? So with my original analysis on crypto and Bitcoin for this scenario, which granted, even that original analysis has been broken from the idea that it stood on. But the idea was that it went through to August of 2022 through April 2023, blah, blah, blah. But with the way that this whole market structure has gone, man, it's just like this run up from 10K to 60K, right? And then the run down to 30, and then the run back up to essentially, the previous all-time high, and then almost pretty much the run back down to 30, right? Like, and could we go to 30 tomorrow? For sure. And the thing to me at this level is like, what is going to hurt the most amount of people? And that's always been my thesis, I guess, going in general, even when we talked about the idea of 100K and 250K in December, and how were the most amount of people going to get hurt if we ran up to 80, right? We were looking at 80, 87, and then if we got a 30% pullback, it would make what's his name, blockchain backer or somebody like look like a hero, look like the king for a minute, because he said that originally. I'm assuming even now. So this is the thing too. Any kind of other analysis recently, like I've completely tuned out. I haven't looked at any news. I don't know anything about this, Kazakhstan stuff. I don't know anything about basically anything. The Fed meeting 2 days ago or yesterday, whenever it was, I didn't even know it was happening, right? So like I just, once again, I paired up with a new analyst that the two of us have been like going back and forth on a lot of new ideas and this and that. And we've just been laying out all the levels, and it's uncanny how just respected those levels get hit depending on the news catalysts, right, that come out at the time. And it's just I just feel like at this level, man, you really got to go against the majority like we always have. Realistically, like I've always been like one that like tries to think against the grain, and I did fall. Not that I fell into it, because I also adapted this idea well before most others did. But at the end of the year last year, like everybody fell into the end of the year, 200K, 100K, whatever. I had adapted that a while before that. So I really thought we'd see a little bit more fluctuation. Obviously, we didn't. We were looking for at least an 80K run up before a 30% pullback. Came at 69, and here we are, right? So, but just the level we are right now, man. You could just see it across the board, where it's like, we're at 42.6. If we ran down to $40,000, that range low, like I just showed you a little bit ago, what do you think the market sentiment would look like if that happened tomorrow? Right? Immediately it goes back to bearish and da-da-da-da. And even though structurally you're creating higher lows, higher highs at the moment, it's going to be scary and it's going to suck. Even right now, we're in extreme fear. If my mouse worked right now, I'd click on the extreme fear tool, right? And we'd see that we're at like 21, so to speak. I'm sure Nick's pulling it up right now, but we've been that way for over 2 months, right? November 9th, we started falling down, and it's January 13th, almost 15th of January, right? It's at this level, man. I just feel like it's going to be a game of chop anyone and everyone out before that run up, because I still fully believe that we're going to see some higher levels in Bitcoin, but the road to get there is going to be absolutely epic. And so you got the extreme fear, right? We've been in extreme fear for roughly 2 months.
Yeah, that's a fact, man. And I think, but the cool thing is about the fear and greed index, at least that I've seen, is that it's kind of like a lot of the rest of the things in crypto. It's almost an indicator that you can go off of, that we're getting. It can sit there for a while, just like anything. But at some point, right, if enough people are down and scared, it's like, okay, we've shaken out this many hands. We've got this many people just absolutely just beside themselves, not knowing what to do. Okay, now it's time to press forward, because that has to happen for the institutions to be profitable. They can't, if everybody just knew what was going on, right, this would not be profitable for these institutions. And ultimately the institutions are what runs and drives the futures markets, the leverage markets, and that's their playing field. We're just happen to be, we're the visitors on their home turf, I guess is what I'm saying.
Yeah, so, and I just want to address the people in the comment section, in the chat, saying I got in at the worst time. I chose the worst time. Guys, the same thing happened in 2018, right? I bought my first Bitcoin after a 50% retracement from 20K down to 10, thinking, wow, it's not going to go much lower than this. And boy, was I wrong for multiple years. Right. So that's the worst case scenario. We did top and we're on the way down for the next 3 years until the next Bitcoin halving, right, in 2024, and then we start seeing the next run up. That's the worst case scenario. If you dollar cost average for the next couple of years, you're going to be in the same situation that we're in currently, right? We're deep in the green, even if we go back down, even if this was the top. And other people saying that we're going to drop to 14K, 18K, below 20K. I don't think that's going to happen. I don't think CVO believes that's going to happen. I don't think anybody here believes we're going to go below 20K. That would be
so what, and not to interrupt you there, but like the biggest thing to me, once again, like I said, this run to whatever is going to be, and my mouse is working again. So it's interesting to note that back here, this is January of 2021. At this level, everyone and their mother was fully under the impression we'd go to, let's just say 100K by the end of the year.
Yes. Yeah.
Okay. Mm-hmm. And regardless of what you think, 1 year later now, we're at the same level. And what does everybody think? Let's not even say everybody. Let's just say like a general 51%. And
we're going down.
Think I 100% truly believe that 51%, the majority, would say or would feel, or maybe they won't admit it, but most people feel that you're in a bear market. So here you think we're going to 100K in this year. We know how it turned out. And here we believe that we're going to whatever, 10K, 20K, sit where we are the whole time. Who knows? And once again, we're talking January 13th right now, man. We got a year ahead of us. Look at what happened in the last year, right? There's so much going on. I want to touch on two things real quick, right? So one is this funding rate, right? So like one thing that I have to say, is different in the sense of like just previous cycles, whatever, like this market is growing, right? We're getting a bigger market cap and we're getting all these things and leverage does play a factor, right? So we have to admit that. And whether or not it's always like, it's not always just like, oh, we're dropping because of leverage, but that plays a big role, right? You start dropping and leverage people, start getting liquidated and then, a cascade. Exactly. So it happens. It's not just to say like, just because everybody's over leveraged, because everybody was over leveraged this entire time. This is 6 months almost, right? You're talking about over leverage. And then you get this one move. Same thing occurs here, right? So I'm just going to point this out, right? So we're short. You don't even see what's on the chart here. Just at this level, we start going long, blah, blah, blah. So now we're starting to cascade to the downside. And during this time, you're talking, we started off at 60K. We're dropping a 41, 39, blah, blah, blah. Everybody's going long still. You see this, right? All the way until literally right here, literally the bottom. Now
it's going to turn around. It's going to turn around. It's going to turn around.
Right, right. You're looking to catch longs. You're going to go to 100K, whatever. So now that we hit the bottom, that's when everybody starts shorting, and you get a hot minute, right? If you're shorting, you're getting a little 10, 20% moves here. If you're cashing out, most people probably aren't because they're looking for that 20K, right? Like little dip right here. So if people are holding their shorts, then they're all good to go. And then you'll notice here that just like here, as we're falling, and you see all these longs coming in as we're falling, liquidate. Over here's the same deal, right? So you're going short. Well, we start coming out of this, and as you can see, as my cursor crosses over, not until literally right here do we actually become long, more so, 51%, right? So you start getting all the longs coming in heavily, basically at the top. And then essentially we get another rundown here. So at the lows, once again, everybody's starting to short, thinking we're going lower, and quite the opposite occurs right there. So at the highs, once again, you get all these longs coming in, and so on and so forth, right? So we get these huge shorts. Not until we're literally at the bottom does everybody start shorting again, right? Short. Even right now, everybody's still shorting, even though you're running up just a bit, which we could still kind of come back down to 40, which is, by the way, 5% from where we are right now. That's not like an epic trade by any means, right? It could be, I guess, if you're going like 50 or 100x, but that's not like, life-changing money by any means, in my opinion. But that's kind of where we're at, right? So you're talking where we were looking at earlier was that if we go down to 40K again from this level, you're talking, absolute carnage, drops us back 5%. Not the end of the world by any means. From here, I would imagine we get a little relief rally back up to this range. And this is the thing. I've been messing with ranges so heavily, and it's incredible to see. And I wish I would have paired up with Magic Internet Money, this other analyst that I've been, working with for the last few weeks now. I wish I would have paired up with him a long time ago, because dude is a savage, right? And, literally, shorted the Rona dump here, shorted 65K, shorted this one, ran it up from here. I mean, the guy's just an absolute beast. But he, really introduced me to these ranges, right? So one of the biggest interesting thing to me is that a range, right, for the year, going back from, I'm going to start this up at January 1st, 2021 until now. And you got this range here. And essentially, we've literally just been in the same exact spot. I think that most people could agree with this at this point, right? This area right here, this white and blue, is known as the value area, right? So this is where 70% of all transactions over the last year has occurred, right here.
What's that? I can't see it very well. What's the price action low and high there that you're in that range?
So the low technically comes in at about 30,600.
Okay. What's the high point there?
The high is about 51. Okay. Right. So, and this is literally from, like I said, back from January 1st. So, you got this high area up here still, like obviously actively traded here, but this is where the majority of trading has taken place. Now, note that there is a point of control right here at about $35,000, give or take, right? And if we were to come down to anywhere, this is where I'd be looking for the absolute savage spot to come in at, right? Whether we go down there from now, whether we go up a bit, we come back, like depending on the thing is that, once again, this doesn't have to happen by any means, but this is just another way to look at some things. And I'm going to clear this off real quick because
because that's actually like what Bobby was asking. Bobby was asking, take out the black swan events, lower levels and higher levels. Like what kind of lower levels, what kind of higher levels do you see? So you're saying lower level, what you're looking at, your analysis that you're bringing up here says maybe that 30-ish number. Is that what you're saying? That's like an oh boy, we're in trouble, but kind of a low point. Or
right, actually, and I take that back a little bit. I'm sorry, but so that was actually the Binance chart. So this is what's interesting about different exchanges as well. So you saw that Binance chart had that point of control actually down here at 35K. This is the Bybit chart, which actually has this level. We'll take this range. So this is what's interesting about different exchanges too, right? Is there's different volume and there's different levels that come into play. So you can kind of like work between the two. But this is one that, once again, like Magic Internet Money, man, he nailed this one because, for example, he uses the Bybit chart pretty much solely. So that last chart I was on was
because
Bybit.
Why? Because all the leverage that's on there, because the massive amount of leverage that's on there.
In general, just the majority of mainstream traders, I think, just kind of stick to Bybit because it's very similar to the old school. Not old school, but was it BitX or Bittrex, whatever one. But like this is where if you're going to go to like actively trade heavily, this is where the fees are going to be the most attractive, so to speak. This is going to be where like this exchange doesn't crash on you like Binance, like any other exchange does. This is going to be where scam wicks don't occur. This is pretty much where all the like mainstream, the real deal traders go to. So for whatever reason, right? Like that's just kind of what he looks at. But like perfect example is if you take the two even. So just like when we're looking at that Binance chart, we were looking down here at the 35K level for that point of control. Now, I'll touch back on that in a second. But now this is the Bybit chart. The range here, which is this blue and white area, is where 70% of all activity occurred in the last year. When we started, these ranges are super simple. In an idea here is that essentially when you come back into these ranges, like you fall out of them, right? You come back into these ranges, you can assume you're going to reach the top of the range, right? You have these deviations. Obviously, you can see here And then essentially when you come back in, you're looking for the bottom here. So when we re-entered this after that 69K top, you're talking that $63,000. Magic Internet Money ended up shorting this because once again, you entered this range back in here and you're looking for a few things here. You start looking for this point of control as one target. Then you look for this middle of the range as a second one. And then realistically, you're looking for the lows once you start coming through all these. And that's exactly where we came down to, like literally the range low of this entire year move here was $39,600, which is what we talked about on the last stream. I just didn't give you the context of why that level was so key, but that was one of the reasons here. So it's interesting to note that. And then continuing onward and upward from here is, an idea set that there's certain levels to look for, but realistically, this is the value area, right? So once again, this is where 70% of the action occurred, but this is not the range. The range starts obviously up here at the top and goes all the way to the lows, and essentially you can go all the way back to these lows, right? So like if we come back down to these areas, this would wreck the most amount of people, right? So if we come back down to these levels and then we look at that Binance chart, for example, that point of control here is about $35,000 now. There's a couple of other reasons that I don't know if you guys have paid attention to that or not, but we've identified 32K, 33K, 35K are pretty ideal levels here, that if we start breaking below this $39,000 level, that's probably where we're going to head. Now, what will happen at that level? And two things just to say here, like not to freak everybody out and think that we're going into a bear market at this point or anything like that. More than likely, we're going to probably get a run up to some sort of level here to get everybody super bullish. And if we're going to revisit these levels, that's when it'll occur, right? That's just one idea. Once again, I'm not here to predict anything at this point. I'm just trying to plan and prepare.
Give people some options.
Right. And what is the other, like there's two things we've talked about on your channel for months at this point now, is that this is going to be the most confusing time, blah, 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 blah. But the other thing is that what constitutes a bear market, right? Nobody can give that answer. Nobody can give that answer. What does it mean? Is it breaking in a moving average? Is it losing this low? Is it, under 40K? Is it losing this low? Like, you know what I mean? Like there's no answer to that. So I trust and believe if we, even from here, right, if we drop down below this 39K level, 38K, we start coming in at 35, man, could you imagine the amount of panic that would ensue? And to me, I think and to me and Magic, even like it wouldn't make sense to even just drop from here. It would probably make more sense to rally up, get everybody, really excited again. Thinking we're heading to 100K by the summer, blah, 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 blah. And then come back down. Right. So, and once again, there's levels at play here that people just do not look for. Right. And like utilizing these volume tools, just that one, just the difference on here in the Binance chart, these points of control here are right there, right? So like this level right here, this $35,000 level, to me would probably be like the most ideal level to enter, especially if we started running up towards something else. We're going to get that lower low. We're going to come back down, and I guarantee you, everybody in the market exits at this level thinking we're going to 10K, 20K, blah, blah, blah. But once again, not that this has to happen by any means, but I'm just throwing out an idea here that we've been contemplating pretty heavily. So interesting stuff, man, not in the least to say. So
yeah, we've been telling people, like, listen, the facts are that we are always speculating on the markets, but right now everybody is relatively unsure. I talked about it on Around the Blockchain the other day. I've heard multiple other creators kind of come off their confidence horse, if you will, right? They've just kind of, all of a sudden people are like, ooh, kind of brought down a little bit, not brought down as in like they're doing any, less fantastic work or analyzing, right? It's just the fact that the market does not care about any of us. They don't care about our freaking predictions. They don't care about the trend lines that we are coming up with. They don't care about any of that. What they care about is their bottom line. And if we are biting into their bottom line and they see a way to be able to flip that around and make more money for themselves, they're absolutely going to do it. CVO, let me ask you, Heidi earlier was asking if you could do a quick little TA on, what was she asking about? I'm trying to find it real quick. It was
Uniswap.
Was it on Uni? Yeah. Can you do a quick little bit of TA on Uni?
Uniswap.
Smash the likes, guys. If you're in the chat, and we've got, what do we got? 69 people in here. We should have at least 69 likes. It's literally so simple. It tells YouTube that you guys like what we got going on. Just as I was moving that up, if you of the Debate Crypto Academy, we do our seminars every single week. That's private seminars where we are teaching trading. We are teaching just all sorts of crypto education to help you make better decisions in the crypto markets. We're giving away a whole year of Market Cipher. And if you use our FEMEX code below, all you have to do is make some sort of a deposit. Doesn't matter what it is. The next 50 people to sign up with our FEMEX code gets $20. So if you want free $20, I know it's not a lot, but hey, $20, 20's a 20, as a friend once told me, and I won't go any further with that. But
God, all right. So just
20, buddy.
just a Uniswap quickie here, right? So we had this falling wedge back in when was this? I guess since December. Had a breakout retest, and we were looking at this measured move right here that came in, and since then we've fallen out. So one thing, like I said, I'm merging my strategy here with this volume and ranges here. So it's pretty interesting to note the two of them. So here, there's not necessarily a pattern going on. So as soon as I see that, then I look for these, possible range ideas here. And realistically, you got the bottom of this range coming in here at about 1462. All right. You got this point of control, which is, one of these major areas here that we're going to come back into. I've come back into that a few times. We've lost it since then. So you may come back into the bottom of the range, about 1460, which is about $1 from where we are now. The high of the range is going to be that next major target back at about $18. And if we start to come out of this, right, you're going to be looking for these targets, one of which being majorly at 2346, this 1.618. So it depends on, Bitcoin, of course, but essentially just as many other assets right now, it's pretty much just kind of ranging in this area right here, which is a pretty big range, it looks like. So
yeah,
you're talking like 23% window here, give or take for January or so. You got the low coming in there. You could come back, and this is the thing. You start living below these point of controls and just kind of like bouncing around in here. Generally, you kind of start coming out to the downside. So that's something to look for there. But if we start, kind of taking over these levels here, you take the top of the range there. I'd be looking for that level we just talked about, that $23 there. So.
Appreciate you, bro. One of the things I wanted to remind everybody, the reason that we talk about having fresh powder or just having capital sitting on the sidelines is for times like right now. Okay. If you look at the market as a whole, with everybody being so scared and down and whatever, if you are actively trying to, dollar cost average in any type of way, these are the important times to be. You are literally buying local bottoms right now. Could we go lower? Yeah, absolutely. But we have started to range at points where all of these whales are accumulating. When we talk about swim with the whales, when we talk about do what these big dogs are doing, this is what they're doing. And so there's so many opportunities. There's so many projects that are solid projects that are incredibly undervalued right now. I mean, I literally could rattle off 10 different projects right now that I looked at the price on them and I was like, are you serious? That's all the way back down. We were talking about gold fever yesterday, Miguel. It got all the way up to like $10. We're super bullish on that game. We think it's going to be fantastic. We're going to be working on it with our academy, and it's down at like, what was it, man? $4, $3.
Yeah, $3 and something, like low 3, I think.
I was like, geez. So there's just a lot of opportunity, guys. So I guess I want to just give a little bit of encouragement. Yes, things might feel down. Yes, you might be, frustrated because maybe you got in towards the top. But what I want to encourage you is I actually had a one-on-one with somebody earlier. That was yesterday, I think. What's today? Today's Thursday?
That was today.
It was today. I had a one-on-one with somebody earlier today. Fantastic one-on-one, really good guy. And one of the things that I saw from his portfolio that I was really proud of him was he averaged down. And you just don't see a lot of people do it. You see people want to buy these green candles. You see people want to buy what's popping right now. Has he made mistakes? For sure. Have I made a ton of mistakes? For sure. Has Miguel made mistakes? Well, no, Miguel's never made a mistake in his life. But Paul probably has made a mistake here or there. And ultimately, what I want to get at is that it's important to be able to have some capital sitting to the side so that you can average down, so that you can buy what ultimately is an opportunity. So just want to throw that out there for you.
Yeah, 100% agree with that. That's all it is, right? Dollar cost averaging, depending on what your time frame of this market is. If you're long-term in this market, which is the safer play, then, there's nothing to worry about in the short term. People live on the day-to-day, like what's Bitcoin doing today? What's crypto doing today? What's it doing tomorrow? What's it going to be the end of this week? And it's like, guys, zoom out, right? Look where we've come from. Last year in January, 40K was bliss. Now 40K is disaster, right? And it's like, but why? Why?
Mm-hmm.
Right? Because people are just living in the short term, get rich tomorrow mentality, and not in the long term, in the next 5, 6, 7, 8 years. Where is crypto going to be?
So, Paul, let me ask you before we close out this evening. I know you're not doing as many on the prediction side of things, but just kind of are you still seeing the 100+ narrative happening this year, or are you kind of reconsidering that notion?
No, I still fully anticipate seeing, whether it's this year, so to speak, like 2022 by December 31st, whatever. Like I've kind of knocked the time frame, but I would imagine, like, so for me, man, like I see a run back towards 50K, maybe a little more than that, whatever. I think that everybody would get super bullish. Possible, and then once again, I'm going level by level, so I'm not even gonna throw out like the idea here, but like just this more so like what I just showed you, right? Like where $35,000 Bitcoin is possible, and for feasible reasons of volume weighted data and all this and all that. If we go up to 50K, 40K, obviously we're at 40K now, but and see a pullback into the 30s. I think that would absolutely shake out everybody, right? Like that would destroy everyone's idea. That would put everybody in the bear market mindset, and most people would sell out thinking we're going to go to 10 or 20 or whatever the case may be. And this is just an idea, right? This is not saying that has to happen. Maybe we shoot right past. Maybe we go back to 80K or whatever, 69K, 70K, whatever. But yeah, I still see all the targets, man, that I've put in place. I still see like 100K, 200K Bitcoin. I still see that coming in. Some of these, the mid caps, all the targets that I've talked about in the past, I think that they're still probable based on a blow off top scenario of $100+ thousand Bitcoin. It's just, I think that it's going to be once again, the idea here that, we're crossing into now where now it's just no man's land, and everybody and anybody's going to take any run up as the run to 100K. And any downfall as we're in a bear market. So it's just going to be that way until the end of time, like at this point. So you got to strap on and strap in, I guess, to say the least.
Did you just say? Well, okay, yep, gotcha.
Strap on, bro.
You need to strap on.
I mean, Paul needs batteries tonight. He's talking
Yeah.
about strapping on. Listen, hey, you know, we're picking up what you're laying down tonight, bro.
Yeah, come on, dude. It's 2022, man. You got to strap on.
2022, you got to be with it. You got to get with the times. Like, I'm with it. I'm with it. A 20's a 20 again. Like I said.
Oh god.
Miguel, before we jump off here, bro, how are you feeling about your baby right now? I mean, I know this hurts, and I know like being the maxi in you is like, you know, feeling a little bit of pain in this choppy times, but I guess I just want to give you a little bit of encouragement. It's going to be okay. This is a virtual high five. It will be okay. I want to just do some breathing. Actually, that was actually for myself because I had been planning on selling, you know, closing out below 40. I am fully reconsidering that position and have been reconsidering that position. But yeah, so at any event, Crypto Fam, we appreciate all the support. I want to say a bunch of super chats tonight, a bunch of action in the chat, guys. We love you, each and every one of you. We appreciate you guys. We appreciate all the support. We are continuing to grow. Paul, you're a big part of that. We appreciate you coming on, man. Thursday
100%.
nights are fun. We really do appreciate having you guys on. Listen, there's 67 people in here. If we don't have 67 subscribers in here, and Paul doesn't have 67 subscribers in here, then each and every one of you I'm holding accountable. You are all wrong, right? We're working together to do this thing called crypto, and we hope that we are educating you guys. We're doing it to the best of our ability. So we appreciate you all. We will we'll look forward to seeing you guys soon. Just as a reminder, what do we got coming up? We got Saturday Night Live coming up. We got tomorrow tomorrow off. We might do a Saturday morning cartoons, so to speak, stream, guys. And then DCA fam, little teaser here. Miguel and I have a little announcement for you guys, but we're going to make that on Sunday. So make sure that you guys are in the seminar on Sunday. We're excited. We've got a little something that we want to roll out. So until next time, Crypto Fam, hodl.
Like it's hot.